Intel just had its best days since 1987, up 24%, blowing past its dot-com record. Meanwhile, oil is back above $106 a barrel, with the Strait of Hormuz still locked down, and the S&P closed Friday at a fresh all-time high. This week was a tug-of-war between euphoria and risk. This is your weekly recap. Three forces shaped this week, and they pulled markets in very different directions. The first, Intel's blowout earnings. The chipmaker reported first quarter revenue of $13.6 billion, crushing expectations, with earnings per share of 29 cents versus a 1 cent estimate. Google committed to using Intel's processors for AI workloads in its data centers, and the stock surged 24% in a single session, its best day in nearly 4 decades. It blew past its dot-com era record to close at $82. The rally rippled across the entire semiconductor sector. AMD jumped 12%. ARM, Marvel, and ASML all gained more than 3%. The second, the Iran oil deadlock. Despite the ceasefire holding, the Strait of Hormuz remains effectively closed. Both the U.S. and Iran are running naval blockades, restricting tanker traffic through the channel that carries 20% of global oil supply. Brent crude climbed above $106 a barrel by Friday. Talks in Pakistan are expected, but the market isn't pricing in a resolution. It's pricing in a stalemate. The third, an earnings split. ServiceNow crashed 17% after the Iran war delayed large Middle East enterprise deals, dragging the entire software sector lower. IBM fell 8% in sympathy. Tesla beat on earnings, but hiked capital spending guidance from $20 billion to $25 billion, and the stock dropped nearly 4% as investors balked at the cash burn. So, what does this all mean? This week's rally to record highs was real, but it was narrow. Strip out semiconductors and the picture looks very different. The S&P's new high was driven by a handful of chip names riding an AI demand cycle that keeps accelerating. Intel's numbers confirmed what TSMC showed 2 weeks ago. The infrastructure build-out is far from over, and the companies supplying it are printing money. But the rest of the market is navigating a harder environment. ServiceNow's miss wasn't about fundamentals. Subscription revenue still grew 19%. It was about geography. The Iran conflict is freezing deal activity across the Middle East, and enterprise software is the first sector to feel it. If the Hormuz stalemate drags into the summer, expect more companies to flag the same issue. Tesla's capex shock is a different kind of tension. Musk is betting $25 billion on AI infrastructure, Optimus robots, and the robo-taxi rollout. The street liked the earnings beat, but not the implication: negative free cash flow for the rest of the year. Tesla closed the week below 400, and it hasn't been able to reclaim that level in 3 sessions. The one genuinely new story, X-Energy went public Friday in the largest nuclear IPO on record, raising over $1 billion. Shares opened 30% above the offering price. The AI power demand thesis just got another data point, and the market is paying attention. Next week might be the most consequential earnings week of the quarter. Microsoft and Alphabet both report after the close on Tuesday. Microsoft's result will be the one to watch. Azure cloud growth is the single best read-through for enterprise AI spending, and the stock has been under pressure from its massive capex commitments. Alphabet needs to show that Google Cloud's AI momentum is holding. Analysts expect cloud revenue up 50% year over year. Beyond big tech, Tuesday brings Spotify, UPS, Coca-Cola, and General Motors. Thursday is the heaviest day of the week, with over 300 companies reporting. And on the economic calendar, the first estimate of Q1 GDP lands. Any sign of deceleration while oil stays above $100 could shift the Fed conversation fast. The Hormuz talks in Pakistan are the wild card. If progress is made, oil could unwind sharply and the entire sector rotation reverses. If not, $110 oil starts becoming the base case. That's your week. Intel rewrote the record books, but the oil ceiling hasn't cracked. Watch Microsoft, watch Hormuz, and we'll see you next Sunday. This has been the Flow Journal. This content is for educational and entertainment purposes only and does not constitute financial advice.